Were people trading today? How did you get on? So we started at the start of the day. We looked at the US dollar and we talked about how it came up into resistance. We were looking for the data to be the catalyst, and we got exactly what we wanted. And we got that move down into support en route towards the 38.2. Do we all recall that from the start of the day? Okay. Okay. Trading psychology. We can look at that. Um, for me, trading defines you as a person, really, and it's going to show it'll show your character. And if you stay in the game long enough, you'll learn a lot about yourself. Um, I think you've got to be good at taking losses at the end of the day. You got to harden up in that respect and follow your system. Um, you've got to have faith in your system, and that comes in over time. It takes time to carve that out, and you've got to run through, the thorns to get to the greener pastures in that respect. You get some painful experiences, and you learn the hard way. There's no two ways about it. And there are many ways that people go about that. They have their routines, their daily habits. For me, I personally wake up at 4 in the morning. I live right by a freshwater lake here in the highlands of Guatemala. It's pitch black. It's not easy. It doesn't get any easier. But I get up at that time in the morning and I go and jump in the lake, um, and get myself in a mentally prepared for the day ahead. Exercise is good. I've got dogs. I walk them in the morning, and I try to leave whatever baggage from the day before that I might have picked up in a bad trade. This week I sold instead of buying, so I had to cancel the entire trade. I had to buy back double and then just come out of the trade. It was a perfectly good setup, and it ran to take profit. Those sorts of things. Putting yourself in an environment where you can best eradicate those types of risks. Um, so it's a balance, and there are all sorts of different ways that people go about managing their psychology. But I think over time, over the years, you you don't need to. Well, at least in my case, I don't feel that I'm physically having to pull myself away to go and meditate purposefully because I'm going to trade this day, or you just get into a routine of daily habits and it becomes a lifestyle. And your skin thickens and you learn to take losses and to forgive yourself when you make mistakes eventually, right? Um, and having good company, friends and family, pets, distractions, um, other hobbies. For me, sport is a big one. I play football. I run a football team. My knees are barely keeping up with it these days, but other than that, I mean, there are books out there, Trading in the Zone. Uh, Mark Douglas, that's a good one. I'd advise reading that. Um, there's an audio on YouTube, which is good. There are lots of podcasts that you can tune into, specifically geared for traders. Um, I could maybe do some research into that for you and maybe do a catalogue of decent reading, podcasts, um, and so forth. What do you do, FX Box, for your psychology? Let us know, guys, in the chat. It's a good question. It's an important topic, and also it's like how do you perceive money? Um, for me, having working at FX Street or having an additional income, um, helps as well. It eases the pressure. It's not all or nothing. So having a secondary income or trading being your secondary income, until a time that you don't, you feel that there's no need to generate from elsewhere. But I think if you look at any, I mean, the idea of this is to make money, right? So as much as enjoy it, but I think anyone that's really, really wealthy, and they've made a ton of money, it's not just through one income stream. Maybe that's the key. 1230. I tend to TP my trade too early, only to discover the same trade gave more. Oh yeah, of course, happens. It happens. That you okay? So look, just what is it? Set and forget. Um, I mean, in time, you'll experience that so often that you'll stop taking your profits early. You'll just be like, well, I know what's going to happen. If I take my profits too early, it'll run to my target, and that'll happen so often that you'll stop doing it. This all comes with experience. You'll only fall off your bike so many times that you'll next time you won't. You'll stay on it because it hurts, and that's how us humans get disciplined through our failures and mistakes. Yeah, journaling is good. That's fantastic. Yeah. Anticipate the loss. Write that down. I am prepared to lose this, and if I make that, great, I'll move on to the next trade. It's, like I say, you can lose 7 times in a row, and the next 3 are the ones that are going to make you the money. And it's about preserving your mental capital as much as your physical cash capital. So, whatever tactics you can, there's no right or wrong. It's all down to you. Trading is a very personalized thing, from strategy towards your actual trading, and then your strategy towards how you manage yourself during the day and in life in general. Disciplining yourself. That's a big one for me. Going out playing football, and then everyone wants to go out and have quite a few beers afterwards. It's like, well, it's the fear of missing out of your social activities and being part of the crew. Um, and but at the end of the day, where's that going to get you in trading? So it's balances and so forth. Okay, so I don't know if I've given you anything there of value, but if anyone else has any ideas on that, feel free to come forward. In terms of the day, these are the main takeaways, really. So we've got Fed officials that were touting the job market slowdown, and seeking a pivot from hikes. Um, in terms of the data, the wage growth and lower unemployment underpinned solid jobs market. And then we got here, I'm just looking really concentrated on the banks. ECB's lane sees inflation slowing slightly later this year. Bank of England, interest rates rise, working. Interest rate rises are working. And those really are the main takeaways for me. A little bit on the US dollar, um, and I don't know entirely what got into the stock market, but I would hazard a guess that the sell-off. I mean, if we look at the because I'm going to relate it back to this in a moment. But you saw these sell-offs. Um, let's come to a different chart without all the drawings. So we got an almighty whipsaw. Look at that. So out of nowhere, out of the blue, bang. Feel very sorry for anyone that was holding on to those gains today. Uh, very sorry indeed, because that is just unbelievable. Um, so reason behind that, the market, I was reading an article over in Spot Gamma. So you got put buyers apparently accelerated in the afternoon, contributing to the massive slide. So that to me is negative sentiment. So you've got investors betting on lower prices in the stock market. So they want the right to sell at higher prices, and the market was flooded with those purchase of puts. Um, and then when you combine that with the general sentiment around, where do I have it here? Around this Fitch downgrading that may have a delayed reaction in the market, essentially, is what I'm trying to get to. Where did I put that spiel from? Rabobank, our friends at Rabobank wrote an article that was quite interesting, talking about the downgrade to the US credit rating from AAA to AA. That was earlier on in the week. Was it yesterday or the day before? I can't remember now. It's reinforced attention on the US fiscal situation and the political polarization in Washington. So, with that boiling on the back burners, um, it could have a positive effect for the US dollar, potentially positive for the gold price as well. It's currently pegged to risk sentiment though, but that could unwind if this starts to gain traction over the course of next week. That would be significant. Especially when we look at the ECB and say the RBA, some of these central banks that are um, diverting away from the Fed. There's still a hawkish sentiment around the Fed, and less so elsewhere. So essentially, what these analysts at Rabobank are saying is that's supportive for the US dollar going forward. So next week will be interesting. We've got US CPI, and we've seen plenty of moderation in that data. And the preferred measure of that will be the core CPI. So all eyes will be on that. I believe is it next Tuesday. I think it will be. Key events coming up next week. Got bank holiday in Australia, Monday. But that US data, not until Thursday. Okay, not until Thursday next week then. So we'll be listening out for Fed speakers and that US CPI data. Yeah. So that's what we're looking for next week. And then coming back to the charts then, if we clean this up, where do we stand with the US dollar? Well, I think we can continue somewhat lower in the US dollar. We've got the euro, which ran to target very quickly. It was one of the best performers, or not, if not the best performer on the day. We talked about that popping higher, and it did. I did not partake in the euro. Um, these setups today were fantastic. It's just a shame that they came ahead of non-farm payrolls because there was nothing I could do about them before the data. But I would like to have been in that trade. I took gold instead, and that was just, well, it still is, very painful, slow burner. I had to get in many increments and a lot of micromanagement there. It was just, it wasn't blowing off as I would have thought it might have done. And, that goes to show the indecisiveness in the market. Um, Even with yields tumbling off their highs, gold was unable to really take off. And that's unusual for gold. Gold is usually highly volatile and would have lapped up the drop in US yields, um, and the mixed sentiment around the jobs data, especially in regards to global recessionary sentiment. Um, with the US dollar also plummeting, it's bizarre that we didn't see that run, but there we go. Um, but did pretty well out of it over the course of the day. Did anyone else trade gold today? How did you get on? You find it as painful as I did, or were you in and out? I mean, I was just holding on. I was coming out when it was slowing down, getting in when it was picking up, coming out when it was slowing down, in anticipation of, well, this is gonna break any moment, and it just never did. Um, anyway, so for the week ahead, we are, um, we will be on day 3 of the 3-day cycle, and day 3 of the 3-day cycle was down solo. I'd expect that to carry on moving up. What tends to happen is, in this scenario, is you'll see a drop on Monday, and then London will buy into that, and then we'll get the momentum to ride it high. So if you're holding on to gold over the weekend, beware of the prospect of a stop hunt below these lows. You've got equal lows down here, and there's plenty of money and stop losses down here. Yep, okay, so we'll look at oil in a second. So that's my take on gold. Looking at US oil, then we've come right up into resistance. I've been tracking this as well, catching the sell off, but we've come right back up into this daily resistance, somewhat on the front side of this trend, well, very much so. But I'd wonder if this isn't going to peter out. I mean, fundamentally, I was reading up on oil. Give me a second. Looking over here at what TD Securities have to say. Talking about Saudi Arabia's decision to roll over its voluntary production cut, while also opening up the potential to deepen the cuts, in addition to Russia's export curtailment, should keep crude markets on a sharply tightening trajectory. In this sense, we think recent rally has staying power. Okay. Well, to the contrary, I think we need a pullback. On a weekly basis, this is 1, 2, 3, 4, 5, 6 weeks of consecutive gains, and that doesn't happen too often without a healthy correction. And if that healthy correction is going to come, I think we're due for it, given that we're up in resistance. Now, obviously, I wouldn't be selling it against a strong trend like that until we start to see good evidence of a deceleration, and so far we have not got that. We are still making fresh highs, and that can quite easily continue higher. Um, and 84 would be an area where I think things would peter out, but we'll see what happens. So yeah, this Nasdaq, we've come right back into my preferred area to get involved in the market. So obviously not doing anything into the close, the weekend, and we'll just monitor this on Monday. Perhaps we'll get a slow consolidation and the opening balance Monday and Tuesday. If we can break out to the top side of it, maybe we'll have a parabolic uh, um, correction of today's drop, and we'll wait for more confirmation on what really was driving that move. And the same would be respect with the equities in the S&P and the Dow. So want to look into more on this. Dollar yen was a lovely setup, and long may that continue all the way down into 141. Reassess things at that point with that potential support area kicking in. Dollar Swiss moved into that low hanging fruit area we talked about. That was also a nice call. Aussie yen. The yen has firmed up significantly against the Aussie. Um, Aussie yen is regarded as the risk barometer for the FX market. So obviously, with that drop in stocks, the Aussie yen has followed suit and driving deeper into demand territory. And we'll just have to wait to see if that decelerates on the back side of the old bearish trend, so on the front side of the counter trend line. So there are prospects of a continuation up if the lows hold up at the start of next week. Same would be said for sterling yen. That also was a good call. We were talking about the continuation to the downside, and long may that continue all the way into our targeted area down towards 178, 1785, and then 17800. Yes, this video will be on YouTube, and we're going to wrap up very shortly. There's not much more to go into. Um, Sterling dollar, I would say, is building structure, bullish structure to continue higher. And those are the ones that we've got highlighted. Those are the ones that stood out. Those are the ones that have most potential still. We can look at the Aussie pulling back, still within bullish territory, breaking structure, healthy correction. It can continue higher. We need that US dollar to continue printing lower, deeper into pullback territory, right? So we have that marked up as follows. We've got a target of down in here, so that gives prospects once, if sentiment turns around, which is currently risk off into the end of the week for whatever reason, that has prospects of flipping over and supporting these commodity currencies back on the upside. Will this, okay, dollar CAD. CAD is the least supported, and it's being pressured all the way through whatever structure that was there on the left in the lower time frame. Okay, I believe it was a imbalance area that it just shot through. Yeah, the lower time frames perhaps. Anyhow, so we've come through here and we're laying foundations for an upside continuation. If we can get through these highs, we haven't broken them yet, not on a closing basis. So if we see a turnaround in sentiment, then that CAD can come in and move back up. Again, US oil will be critical in that department as well. If we can see US oil continue higher, then that will likely be the catalyst for the Canadian dollar strengthening before oil eventually implodes. And if sentiment is bearish for the global economy, then the US dollar can thrive, and we can see that resistance in the 133.80s taken out convincingly. All right, so that brings us up to speed, guys. So I'm going to wish you all a very, very good weekend. And I'll do some homework for you and get some more material out into the education section. And we will do this all over again on Monday. So if you've got any last questions, let me know. Otherwise, I'm going to, thank you very much. You too, have an excellent weekend. Enjoy yourselves. Don't party too hard. And I'll see you on Monday.